Welcome back. The agricultural sector has been severely impaired by the drought of the past 2 years. The crisis has been costly, with cattle farmers losing stock, for example, and others deciding to get out of the business of farming as it becomes unprofitable. The crisis has fed into food inflation, which has been a significant driver of the headline inflation number. But with heavy rains recently and weather experts saying rains could continue till January, could we see progress in terms of crop yields and inflation? Well, Wandile Sihlobo, Head of Economic Research at the Agricultural Business Chambers, joins us live from our Pretoria studios. Thank you very much for joining us, Wandile. What sort of impacts has the drought had on the farming community in terms of sustaining businesses and jobs?
Thanks, Nabu. What's happening is that the impact of the drought, of course, it's well clear throughout the value chain from the farmer side up until to the consumer side. But on the farmer side, we've seen the impact starting firstly, if you look at the crop production, the area planted in 2015-16 in theirs went down by roughly around about 21%. And much of the production side, now when you look at the output, has also been down by roughly 23%. You're looking on across your maize, soybeans, sunflowers, and all of those things. But now directly you look at the livestock, guys, we've seen in there a lot of death on the cattle, sheep, and goats all across, and also just to look at the slaughtering figures, cattle slaughtering figures have gone up this year to levels around about 16.5 thousand heads of cattle a week, while we usually slaughter around about 5,000 cattle a week. So the impact has severely been there, but of course it has some costs. Some of the farmers will pretty much be out of the agriculture sector this time around, but that number is still to be minimum, and that is still to be determined towards the end of the year.
Now, we know, Wandile, that government has tried to fill the financial gaps by dispersing money to institutions like the Land Bank. Has that really had much of any impact, or it's just not been enough?
No, I mean, the money has not been enough, and much of that have actually assisted some of the guys who are on the livestock side by buying the feed that the guys needed in there. But when you look at the crop farmers side, there hasn't been much of the help that is in there. Sure, the help that has come has assisted some of the other guys, the small-scale farmers, but certainly not enough.
This next question seeks to find a silver lining to this dreadful story. We know that of late we've had quite a lot of rains, and it's expected, or at least weather experts say that we're going to be getting rain at least until January. So does this mean we're going to see a reversal of some of the losses? We're maybe going to get a bumper crop next year. What does this mean for planting seasons right now?
No, I mean, look, there is, of course, some growing optimism that we are seeing now. In the early planting intentions data that came out, it indicated that, farmers plan to plant roughly plus 25% of the area than what they planted last year. So certainly that speaks to some of the vibrancy that is in there, and that is linked on to some of the market prices that we are seeing. We know that crops like maize, for example, have hit record levels. So that, to some extent, does provide an incentive for the farmers. And with the agriculture, with the climatic conditions also seeming to be improving, that does provide some sort of incentive there. But now looking broadly to say, are all the farmers going to return back into production, everyone who traditionally plants? That's the question that is yet to be seen towards the end of the year. But overall, it does offer some hope that the climatic conditions are bringing on some good crop. And if you look in the evidence on the ground level, around Mpumalanga, for example, roughly 70% of the maize in there have already been planted. In the KwaZulu-Natal area, roughly 40% have been planted. Eastern Cape, 30% of the area has been planted. So in the western parts of the country, those guys still have time towards the end of the year. So as I would say that for now, we are happy with the progress that we are seeing, and we think that if rainfall persists in the current rate that we're seeing, we might as well be fairly good in the next season. And some groups like, for example, International Grains Council, the BFAP, they suggest that maize production, for example, could recover to levels around about 12.3 million tons in the next year. So yes, the outlook is looking fairly well, but that is depending on the consistency of the rainfall.
But it's interesting that you say that, because you mentioned the fact that there's been a lot of slaughtering of animals, and yet I don't think the consumer has really seen the benefit of that in terms of meat prices. Meat prices seem to have continued to go up, and then when we get the reversal in terms of more bumper crops going forward, what's the guarantee that we're going to see lower prices at the consumer level?
No, I mean, I think the consumers have benefited on the meat side. If you look at just across in the CPI basket, particularly on the food side, everything else have gone up by double digits. Only meat that has gone up by roughly 5% on a year-on-year basis. And that speaks to some of the structural adjustment, because with the meat prices relatively cheaper, we've seen the demand grow in there, which have sustained that smaller increase. So going forward, as the climatic conditions improve, we suspect that farmers will start to slaughter less now. They might slaughter less from the levels that they are in of 16,500 head of cattle a week to around about 5,000 or less than that. And that is going to be one of the things that is going to be pushing up food inflation as you go forward. Because the trick about meat is mainly because it constitutes roughly 30% of the food basket within the CPI. So that's one of the things that is a trick as we go forward. But generally on inflation, looking on into next year, we think that around about Q2, you might see the figure that is currently at 11.6 coming down to a single-digit figure, but towards the end of the year at AgBiz, we suspect that figure could increase to around about 12%.
And if we can isolate the dairy production sector, we understand that that's been very costly for them because of the drought. They've got these herds that they have to feed, they have to graze, and that's been very costly for them. And they're now saying that it's unprofitable for them. There are stories recently that some people are deciding to actually sell their dairy farms because it's just not worth their while. What happens with them? And more so, we're hearing that retailers are importing milk from as far as Poland.
Yeah, I mean, the situation of the dairy industry is concerning. And unfortunately, with the South Africa being affected by the drought and the guys in there under pressure, if you look at the global side, there's massive stocks of milk in there, and milk prices are at the lowest levels since 2010. So that's one of the things. And it might put pressure on the guys. But at the same time, we're starting to be a bit more optimistic now with the rain coming and the fells set to slightly recover. That, of course, will play positively on their cost side when looking on a feed side. So we think that going forward, you might see a recovery in the dairy industry. But short term, certainly they will feel some pinch in there. But if they hold on the stocks that they are having now, I think that they might be able to thrive relatively well as we go on in the next couple of months or so.
Wandile, thank you so much for your insights. That was Wandile Sihlobo. He's a chief economist at the Agricultural Business Chambers.